Hi, welcome to Let's Talk Bonds, the weekly podcast from INR Bonds. I'm Arjun Patsati. And in this podcast, we're going to talk about the best bonds to invest in crisis times. And this is the crisis time with the Russia-Ukraine conflict going on. And this is affecting everything across the world from crude prices with oil touching $120 per barrel and other commodity prices as well, which are shooting up in some of the commodities. So all this is going to have an effect on inflation. However, with this current conflict, despite high inflation, central banks, including the RBI, are unlikely to um, fight the inflation because they do not want to create more pain for the economy by raising rates, interest rates. So the Fed, which is going to raise rates this month, laid down a higher rate hike as with inflation in the US at 4 decade highs. They do need to raise the rates, but they are unwilling to raise rates faster because they don't know what the impact on the conflict will be. And in India too, the RBI already did not sounded sounded out that they're going to maintain very low rates for a while despite inflation fears and a very high level of government borrowing. And investors are finding it very difficult to navigate returns on the in their fixed income space. And more importantly, with high levels of volatility in equity markets, investors are looking for a very decent fixed income alternative. But with this crisis and inflation and low rates, the even that alternative is not looking very good for them. So what do? So they need to look at the bonds, corporate bonds that are available, and there are many bonds that can help them navigate this current crisis period, where in one hand there is extreme volatility in the markets, second is inflation is shooting up, but at the same time, return on fixed income is extremely low and still looks to stay low for a period of time, at least for the next 1 to 2 years. So in all this, the options available to them, they look at government bonds, with up to 5 year government bonds below 6%, 10 year at around 6.8, and the longer in 15 and 30 years over 7%, state development loans over 7%. But all these long bonds carry high interest rates just because, as we all know, that while inflation is rising, interest rates are still down, and the central banks have to raise rates at some point of time or the other. And once this conflict dies down, they might start to raise rates faster, and that's going to push up the interest rates. And long maturity bonds investments may not provide the kind of risk a return profile that investors seek at this point of time. And the other, including bond ETFs like Bharat Bond ETF, again for the 23 and 25 maturity ETFs, the yields are well below 5%. While for the 10-year ETF, it's over 7%, close over 7%, but still you still have that interest rate risk, which is very high at this point of time. And now coming down to the corporate bond space, you have corporate bonds offer a variety of bonds. Each bond carrying its own risk return profile. So very high safety AAA rated bonds for, like Bajaj Finance, HDFC, and others are and some of the PSU bonds for the short end, like 2 to 3 year bonds. They are below 6% levels. 3 year bonds are higher than 6%, and 5 year bonds are around 6.5 to 7%. Still, um, still, this could be slightly better than what is available in the government securities market. If investors are willing to go um, down the rating scale, which is AA, the plus and AA rated or even A rated bonds, some of them are good companies, then they do get much better yields. So you have 1 year bond of say a 5 star business finance, which is A plus, close to around 7.5%, maybe you have 2 to 3 year bonds of TVS or credit or some microfinance companies like Ashirwad and Swatantra in a range of or UPPCL, which is the UP Power Corporation bonds. These are all in the range of around 8.5% to 9.5% and slightly above. You also have other issuers like Shriram Transport, it's AA plus rated, but trading at lower, higher yields. Shriram City, the whole Shriram Group, Piramal, Shriram City Union, and other issuers, including IIFL, Home Finance, Edelweiss. All of them are trading in a 2 to 5 year or longer bonds. They're trading in a over 8% range, going all the way up to 9.5. Navi Finserv offers 1 year bonds at over 9% and above. And also now with all these MLDs coming in, market linked debentures, which is finding favor with high net worth investors, then those bonds are also offering over 8% levels, some of them going all the way up to 10% or even higher, depending on maturity. So you have in this week, the private placements include MLDs of uh, uh, Belstar Microfinance, which is a Muthoot Finance microfinance company. You have Piramal Enterprises, and you have Anand Rathi Global, which have been a very large issuer of bonds, MLDs. All these companies are issuers are issuing MLDs to satisfy investors' demand for both cash arbitrage on interest, cap on tax, which again they have to take the call in consultation with their own auditors, and also given the levels of interest rates available. So the best bonds to invest in clearly are in 1 to 3 year bonds, which can yield anything between 7% or higher, to depending on the risk appetite. Even shorter, even below 1 year bonds, below 6.5, 7% up to 6.5% may look much better than what a liquid fund could give or what a FD could give. And anything over 7% is very attractive if you know the issuer well, understand the risk of the issuer. And if you 2 to 3 year maturity bonds, which are giving returns of 8% or closer, going up to 9.5%, if you understand the risk again, then these are also very attractive investment opportunities for investors. Just as a ballpark, given that the conflict is Russia-Ukraine conflict is affecting even corporates in India who are dealing with Russia, exporting to Russia or importing from Russia, or having raw materials which prices are going up, and crude oil prices are going up, which will reduce the margins. These are all company issuers that will be affected, but issuers that are very largely focused on domestic markets, consumption, lenders to us who are lending to individuals and able to keep their lending um, risk low, keep their NPAs low, and be very cautious and not grow the balance sheet lending too fast. Then these are some issuers that can provide you a very decent return over a next 1 to 3 year period, offering a little better level of risk, lower level of risk than other issuers who are issuing bonds at higher yields, but could face longer term issues if they have, if the crisis does not end soon. So investors will have to look at their options, but there are enough attractive bonds. They can contact their financial advisors who will be able to identify the best bonds for them. And those of with INR bonds, Quick Invest, curating a list of bonds for investors with our own risk score and moderate, and all the information that financial advisor or a knowledgeable investors requires to understand about the bonds, then they can find the best bonds to available in this market to invest in this crisis period. And some of the private placements that's happening last this week includes IIFL Home Finance, SIDBI, ICICI Home Finance. Many of these type of PSU issuers are issuing too, or even ICICI Home Finance. 3-year bonds are below 6%. Very tough levels for individual investors. A lot of institutional investors are investing in such bonds because they don't seem to have any option. And then we had some green energy companies like um, Aavad Solar, and then we have Clear. Green Sustainable and Energy Private Limited, such kind of green bonds are coming out. Green bonds are finding a lot of flavor with the market. The others include Tata Capital Finance, Cholamandalam Finance, which are issuing longer-term bonds at finer rates. Tata Capital issued a perpetual bond at 7.89%. That's very, very tight spread. Rate. Union Bank issued a perpetual bond at 8.5%. Now, so this seems to be a much better kind of a bond. But again, you still have the issue of perpetual, and especially banks, perpetual are rated higher risk by the market. So that's where it is. That's about it for the podcast today for this week. The best bonds to invest in. Yeah, there are very good bonds to invest in for crisis periods if you know where to look for and what to look for. And our bonds quick invest just gives you the bonds that you need. Download the app now, iOS and Android, and do follow us if you're on YouTube, Spotify, Amazon Music, and Apple Podcast. Thank you very much for listening in.